So our next question comes from Natalie B. Natalie says, "Hey Austin and Robert, I'm new to the stock market investing. I'm still in high school and I want to know what can I do to make good financial moves in the stock market for only working 4 to 5 hours a week and making close to minimum wage. I'm working on opening a custodial brokerage account and I want to be able to expand my portfolio, but if y'all can give me the play-by-play, that would be very much appreciated." All right, Natalie, so here's the reality. You are under the age of 18, which means that you have to do all of this with the permission of your parents, right? You have to have a parent or guardian open up a brokerage account with their name and your name, and they must be supervising you and making sure that they approve of all the things that you are doing here with your money. Now, we would hope that they would approve of you investing toward your future, so just make sure you have those conversations with them. Maybe send them this podcast episode. So, Natalie, here's what I would do in your situation. You said that you are working 4 to 5 hours a week, making close to minimum wage. I'm always of the belief that when you are a kid, you should be a kid. You should spend your money on kid stuff. You should go out, get ice cream with your friends, go to the movies, go on those trips to the amusement park, go swimming at the swimming pool, whatever. Go be a kid. I love that. Highly, highly, highly recommend doing that. But if you are so inclined where you want to start investing some portion, maybe 10, 15, 25% of your take-home pay, these paychecks that you get from working 4 to 5 hours a week, that's cool too. Just make sure that it's a small percentage, right? It's going to grow very, very well over time. The easiest way to do that is to open up a custodial brokerage account, preferably a Roth IRA. You can do this on, I think, Schwab or Fidelity or Vanguard. I don't know if Public has custodial accounts yet, but open up one of these custodial Roth IRAs, contribute, I don't know, $50 to it, and then put that $50 into the VOO ETF, which is the 500 largest, most profitable companies on the stock market in the United States, and you're off into the races.
I love this, and I'm going to take a slightly different approach because I remember when I first got started, I was putting $20 a week into my account. And there were people back then saying, "Oh, that's dumb. Why are you doing that? $20 a week isn't going to do any good." But then a few years later, let's call it when I was like 21 or 22, I had already accumulated like $15,000 or $20,000 in the account, and it was growing. And it was really a cool time for me because, you know, I grew up pretty poor and I didn't have a lot of support. And thankfully, my cousin Tim had already been in the financial world. But what I would do also is I would go to your parents because you've already won most of the battle to build wealth and be financially free because your mindset is already thinking about money and how to invest in high school. Most people in high school haven't even given it a thought of how to invest and get started. You're in here in the Rich Habits podcast asking questions. That's incredible to me. Where you start and how much you invest, like Austin said, go have fun. Even if you only put $25 a month or $50 a month into that account, you will be shocked at how much it grows over time, especially if you're consistent. And if you want to go one step further, I would go impress your parents. "Hey, I asked this question on the Rich Habits podcast. This is what they said I should do. I'd love to open this custodial account. Right now, based on what I'm making for my 4 or 5 hours a week, I can take home XYZ amount of money. I want to put $25 a week into this, $10, whatever it is, and ask your parents, would you be willing to match this with me so I can help build towards my financial future?" And I think most parents would be like, this is amazing that my high school child is actually taking the steps on their own to do this. And then you could double up that investment if your parents agreed to match whatever you put in. And I think it'd be a great strategy.
I entirely agree with that. And I only want to add one additional piece of advice, which is once this money gets contributed and invested, forget about it. This is not Natalie's house down payment money whenever she's 10 years older than she is right now. This is not Natalie wants a new car in college money. This is once the money goes in there, the only way it's going to change your life is if it stays in there. And so once it gets contributed, forget about it. Do not think about this. This is delayed gratification to the nth degree. You will not see this money for 50 more years, right? This is money that is going to grow for you and is going to be absolutely incredible in retirement. 65-year-old Natalie is going to be just so happy you did this. But please do not take this money out once it's in there because then you're not investing. You're not investing. So good job, Natalie. We are super excited for you.
I want to click back one more time because you're unveiling all these things. Don't tell anyone it's there. because as it's growing and you're in your 20s and you're having fun and you're in a relationship or whatever's happening, don't let them know, because when you're younger and you're building towards your future, you don't ever want to be in a situation where everyone knows what money you have and then all of a sudden has to cry on your shoulder to get help. Don't tell people. It's for your future. And I love this question so much.